In this video, we are going to be analysing Carnival Cruise Lines, ticker CCL. So to get straight into it, obviously if you're a holder of this stock, you did very well today, seeing it is up 11%. But one thing to note, and is kind of a good sign if you are more bullish on this stock, yesterday we were sitting at $7.25, and that was right below the statistical mean on the 1 year chart. What you can see today is we gapped up and opened above it. Now when you see this is usually an indication of very strong momentum and a likely continuation to the upside, at least for the coming few days. So really, what would be our then assumption on what's going to happen with this stock? So if this momentum continues, and if we go to the after hour chart, we can see it is still, it's not crashing, which is usually a good sign. Usually you tend to see these stocks pull back after hours, but really the open is going to be the key sign. If you get a pop to the upside, really as markets open, if we can break 850, that's going to be that key level, because if we break that 850, then there's a good chance we're getting all the way to 915, because it's going to try and fill that gap that was recently created about 2 weeks back. So definitely be looking out for that. However, while we're in the range of 725 and 850, it can be a bit tricky to trade, because you're going to have the bulls buying and trying to push this 850 to go and fill in that gap. But you're also going to have some people who are either long, holding the stock long but wanting to lock in profits because they're expecting a pullback, or short bias traders, because coming back to 725 is likely at some point to come and fill that gap that was created. Because like we know, the majority of gaps do get filled. That's why we're anticipating a gap fill at 915. And we're also going to, at some point, anticipate the gap fill at 725. However, if we do pull back and fill this gap at 725, that isn't necessarily a bad thing. This will basically just be that second wave. We've broken through, we come back to retest this level, we fill that gap, but buying pressure will most likely increase. I mean, we saw the volume today, definitely a lot on the buying side. I mean, as you can see, we're up 11%. But really, you want to be waiting for that second wave. If you've already missed that move, it's probably a good idea just to wait anyway, because we will probably at some point soon, unless we push straight up to the 850, we will test this 725. Again, a long bias opportunity, because you can have really tight stops on it. If you see it kind of break below that candle low of around 714, you know the move's probably not going to bounce back up, so you can have tight stops, good risk to reward on a trade like this. Now, that's just our kind of going off what's happened on both fundamental and a technical kind of reason, because that is, I'm assuming, more of a fundamental gap considering how much it's moved. And that might be the reason then they've raised $1.2 billion, even though that is via debt. It's still relatively good news. It allows them to grow and kind of sustain this kind of hard environment. So a fundamental gap that you don't always see those get filled right away, but if you do, again, play the second wave, come back for the retest, and then you can play it along. Usually you'll see that, and again, you can have the tight stop for risk and reward. Now though, to quickly delete these and go on to the other technical side of the levels, what are we paying attention to? And as of right now, 1080, 1250, 1550, $18, 2050, 23.25, $25, and $28.50 are going to be our key resistances to the upside. Now, you don't need to pay attention to all of these. It's not saying we're going to hit $28.50. Really, it's just saying once you break a level, you expect to move to the next one. So again, we have broken 725. So now we would expect to move to the upside. However, what we always like to see is that retest. And it's like we said before, again, we're looking for that second wave. This kind of goes hand in hand. Two reasons for entry, essentially. Because we want to see a retest, because if you just move straight to this 1070, it's hard to find a good entry. So that's why we usually like to see that pullback. It shows that the level is valid and confirmed. And then once it's confirmed, we can then play that move to the upside. And we would expect a move to 1070. And again, that's all you need to pay attention to, the closest level. If we break 1070, then your only focus is going to be on 1250. On that 1070, you just want to see a break above, come back to retest it as a support, and then a move onwards. Now, on the other hand, if you're more bearish on this stock, you expect a move to the downside. Really, our only key support is going to be $6. That is our statistical mean on the 6-month chart, and also basically our 52-week low. So two kind of like layers of support around that level. But really, if we break that, the only levels we're going to have is the whole and half dollars. So by that we mean the $5.50, $5, $4.50, $4 and so on, because the only other statistical levels we have is down at $1 and $2, very far off from where we are now. And even if the stock continued to be weak, even though we've seen it fade, seeing it down at $2 I don't really think is all that likely, but I guess time will tell. Anyway, I hope you enjoyed the video. If you did, why not drop a like and subscribe, and check out one of these 2 analysis videos.